My name is Zach. I joined B2C2 back in 2018 as a KX developer, actually. We were a small shop. We wanted to essentially do some cool stuff in crypto, so trading, HFT, store all the data that exists. And that's what the founders, Max and Flavio, so both Belgians, and what they wanted to do was essentially, take advantage of the inefficiencies of the market. There's quite a lot back then. So you had obviously the BitMEX perpetual swaps, you had the spot exchanges, you had the fact that you can send dollars and euros during the weekend, so big arbs there. And that worked well. And then at some point, other people started getting into it. Some competition, some retail, they figured it out. And they decided that, maybe with their background in banking, so Max is from Goldman Sachs and Flavio, similar background, doing tech in banking, they said, you know what, maybe we should, steer towards the OTC side. So what they did was they brought actually the first single dealer platform to the market, which feels like a lot for the market, but back then, I've seen our traders quotes on spreadsheets that were shared between counterparties. So, that was pretty big to have a GUI where you could, put a quote and trade. It was pretty interesting. And today we've got about 500 clients trading 30 cryptos day to day, some good volumes. You can trade against all the stable coins, all the fiat. So that was back in 2016, 2017, just in time for the December rally where, everyone started talking about crypto. And obviously we needed to keep up with demand. So what we decided to do and why I joined was to kind of build this HFT system. So everything was Python native. That's what the founders were comfortable in. And we moved everything from Python to Java in the space of 2-3 years. Feels like a lot, but when you're connecting to tens of exchanges and you've got API docs that are Google translated from Chinese to English, you don't know if you're doing a market order or your resting order. It's important. It takes time. You got a lot of trial and error. There's no UATs, no sandboxes. You just got to bang it out. Open up a TMUX session and run your script and see if it works. And that's what we did. Then we moved everything to Java, C++, Rust. KDB became pretty centric as well. We were fighting with 2 cores, so I know what these guys are going through. And we pushed it like Jesus. We pushed it. We had 2 cores storing terabytes of data, which was a cool story. But at some point we decided that we needed to scale, and the business was scaling. So yeah, that's what happened. And then 2020, late 2020, acquired by SBI, which was great because it just meant that we had that kind of firepower and balance sheet and availability for cash to kind of churn out some good work, hire more, and then with that kind of cash we can launch an options desk, we can launch a funding desk, because that was becoming the new thing. You got staking, yield farms, etc. Some people want to find something else, which is with the funding you can borrow and lend, we'll pay you, or maybe you pay us. You can collateralize with anything, mostly stable coins or fiat. I know some other counterparties that accept like mining rigs, but we're not there yet. Options desk, so yeah, we do kind of vanilla options on a few cryptos, which is cool. So now, yeah, I think when I joined, I was like employee 14, and we're now 150. So we've grown quite a lot, and KDB made that possible because it was hard to sell. And again, I know what these guys went through. It was pretty hard to sell to a small shop that wanted to use InfluxDB, open source, Redis, this and that. And my interview was trying to convince a guy in swim shorts in his bed in Portugal, in the founder's place, that KX was the go-to technology for doing some data stuff. So yeah. So yeah, KX, we love it. We started to love it even more, which is cool. And at B2C2, we're like big believers that data is king. It's like everything that we do, it's all about data. It doesn't matter what you're saying. Like even if you're HR, you gotta show some data. Like we don't want to hear it. And what's cool is that what I did back then was, we built the data infrastructure, connected to all the exchange, yada, 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 got the HTTP, got the TP, everything else, and I built this like generic API just so that, if you're using Python or Java or Rust or whatever, even like JavaScript, you can just have this generic API, and that's the same stuff we use for Tableau, for Grafana, for KX dashboards. It's just one API, doesn't matter. It's like literally just pass in a JSON, and that's a dict, right? And that's your parameters for your query, and you don't need to think too much about what's in this data. And actually, right now we're in the process of building this kind of data catalog, which is going to be all seamless, so it's even cooler stuff. So yeah, KDB, what do we do with it? Research, obviously, that's the quants. Middle office, use it quite a lot. Again, inventory management, that's the big thing in crypto. Doesn't matter if your trading strategies are good, you got to have the capital. You've got to make sure that it's on the exchanges, that you're settling funds with clients. So that's what the middle office do. They use Grafana and KDB. They look at, I've sent some funds to Binance or Coinbase. It's taking some time. Why hasn't it settled? And that's important. So it's not just about trading. It's also the middle office. We've got trading decisions, obviously, execution quality, if we're running a TWAP, or if we want to look at markouts, FIFO, etc. And then risk team, actually, they use it to kind of build credit scores of our clients. So they use a combination of market data, blockchain data, and our own kind of internal NOPs, etc. And we use it actually for quite a lot. So SBI acquisition deal, we use that, KDB, HMRC reporting, IRS, FCA licensing, and Salesforce, we push just data that salespeople can look at, which is great. And then even when we had a court case in Singapore, trying to prove why they tried to screw us over, we used KDB to show them that, and we won. So cool story. Viz, obviously, is like the next step. You get the data, you store it, you show it, you got some devs, some quants, maybe an Excel spreadsheet, people can access it, but then next step is I don't want to start thinking, I just want to pick some parameters, display some stuff. So yeah, cool few charts, I don't know if you can see, but this is a Grafana back then before we moved to KX dashboards, but again, because of this generic API where you can use REST, you can push some data, get some data back. These are all fake volumes, by the way, it's UAT, so don't even try to understand. And we can look at everything, right? So we've got another chart, we can see some cool stuff. That was Grafana, we were broke back then, 2 cores, like I said. So Grafana was the best thing. Now we're a bit richer and we can afford KX dashboards and do some cool stuff. So that's what we've got now. This is one of the guys built this a few days ago, which is great. It looks great and it's kind of more flexible. You can push it to its limits. Grafana was great at the start, but now I've got terabytes of data. It's kind of lagging. Cool. So yeah, what do we do with KX and what kind of data we have? We've got everything. Hundreds of data sets. I think I said 200, but I think it's even more. Obviously, all the classic market data, L2, L3 incrementals. You want to know what happens when it's tick by tick. If it's an amend, insert, update, whatever. We've got trades and quotes, our own and also the public. OTC pricing, latency metrics, market events, economic events, the classic execution stuff, FIFO markouts, TCA, which is great. We need to know what we're doing. That was day numero uno. We had markouts. We need to know what's happening. We don't want to be driving blindly into the markets. Configuration changes, and then we've got all these other stuff, calibration, ML model results, and then what we do is we wrap it up, and then we've got this kind of mega function that says my P&L is wonky the last few days. Show me everything that happened. It's like a P&L explain, and you're all right, these are all the configuration changes. This trader, changed the spread on this strategy. This was the latency on Binance, your round trip time. You're sending way more orders. You're canceling none of them. Your trading adapter is not able to send orders, something like that, and we can explain it. We can be all right, this is the source, maybe there's a middleware malfunction, and we can join it all up, and I'll talk later, but we can even add up some blockchain data, which is something we only started doing recently, because, crypto is just an asset we trade, but what we've come to do is that, It's an asset. We could have been trading FX, but we chose crypto. So yeah, when I joined, 50 gigs a day, and now we're about 3 terabytes. But I think on some big days, you got Elon Musk tweeting it's going to be up to 8 terabytes easily. And it's all cloud-based, but actually we want to go back to bare metal because it's too expensive. If you're running a 24/7 thing in the cloud, it's getting expensive. But we've got thinking about KX Insights, bare metal. Let's see what the KX guys decide. So blockchains, big transition, KX to blockchains, but it shouldn't be, because if you're like a Q mortal or Q god, like time series blockchain, it's like same, slightly different. But essentially what they do is they just store information over time, right? You got a ledger, it's immutable, it's safe, secure, it's transparent, and you can record them, you can log them, you can verify these transactions. That's what we talk about mining. And they've been used, right? Like, same way that KX is not just used in finance, you can start using it in health. Crypto is the same in blockchains. So you can use it with cryptocurrencies, supply chain management, financial services, voting systems. Actually, I know there's countries in the Middle East that use it of all places, but somehow it works. And it's just a beefed up time series, really. It's like, it works well. And there's actually similarities with the way Q and KX work, is that you've got your replayability, right, of your blockchain. That's like -11 bang, easy. You've got your scalability. That's just you got your nodes verifying stuff. That's just having a backup database. And then you've got a blockchain. You've got a ledger. You've got timestamps. I mean, that's like the first thing you add, right, to a database and to your table. So it's not like something new for a lot of us, and that's why I started playing with it, because I was like, this should be slightly trivial, but it's not, and that's why I'm going to come to the following slide after this one. So what do we do with blockchain? So we use it across all departments, kind of manually, kind of with some tools. So compliance, for example, we use chain analysis, transaction monitoring. We want to know what our clients are doing with our funds. Are they sending it to kind of sanctioned countries? We do kind of like a degree of separation. We're like, all right, you send us some funds, we send it back. What happened to that stable coin we sent you? Oh, you sent it to Iran. Maybe we should offboard you, maybe not. So we can keep track of that during their trading, but also before onboarding. We want to make sure we're ahead of a curve. So that's compliance. We got the finance team. They use it, day to day. Obviously, there's tools like Fireblocks, Copper, etc., Lacero that help you settle funds with exchanges, send it across, settle funds with our clients as well. And then finally, before we get to how as a trading team we use it, the credit team also uses it, because we want to know what assets our client own. Do they have the right wallets? Do they actually have enough tokens in their wallets? We want to make sure that they can actually settle. If we ask them to settle, they've traded. The way B2C2 works is that we allow clients to, trade, but you don't need to fund everything. We just say, all right, you can settle later. You've passed all the onboarding, so we'll trust you, but we still need to make sure that you have the funds. And that's what we do. We keep a credit score, basically using blockchain data, using KDB data to kind of know whether or not these are legit counterparties we can interact with day to day. And clients counterparties, again, because we work with foundations and protocols to provide liquidity. So coming back to blockchain, the data is noisy. In fact, it's very noisy. It's difficult to understand, slightly difficult to play with. It's often mislabeled as well. What happens is that you sometimes have, it's all open source. So what that means is that, you have people kind of labeling data for you. And sometimes, you can end up on the blockchain with a mistagged wallet. And you're like, oh, this person just sent 1,500 Bitcoin to B2C2, which is not actually what happened, but it's out there on Twitter, it's out there on the thing because someone mislabeled our wallet. And that's why you need to use more sophisticated tools rather than just the pure kind of stuff, raw data that you get on the blockchain. You need to use stuff like Arkham Intelligence to tie. These are paid for platforms. They've got an API. You can pull data from there, pull it back into KDB, you've got CSV, you've got JSON, you can combine it with market data, and then you can start building and creating stories, which are pretty interesting because it's that publicly available data. Everyone can play with it, everyone can work with it, and it's, the possibilities are endless. So really the basics are monitor the blockchain health. You're sending funds across a blockchain, a network, you need to know how long it's going to take to confirm, and you adjust your trading, you adjust your decisions back on that point. And then there's the gas fees. Obviously, if it's going to be more expensive to settle with clients, to send funds, maybe we want to hold back, wait until it's a bit cheaper. And that's kind of things you track. So obviously, there's like the OTC side, which is, we're trying to confirm over the blockchain some stuff we sent. If it's going to be expensive or if it's going to be slow, we need to understand why. And then you join up with market data, and it becomes really interesting. You're like, oh, well, so the confirmation time is actually slower now. There's maybe less miners. Maybe there's just people pulling out. So what do you need to do? You combine it with market data. You start looking at the order books. And it turns out, actually, when the confirmation time sometimes goes up, well, you see less liquidity on the exchanges. So your spreads widen, and people are going to come to you as an OTC desk because it's like, well, it's getting too expensive to go on Coinbase and Binance. And that's great because we can combine it, we have the access to that data, and we can adjust our pricing and our spreads, make sure that our clients can keep trading with us and do everything they need to do. And then we've got Fireblocks, which I talked about, which is just like a platform that helps us, move funds across different exchanges, different blockchains. We don't want to spend too much time doing all of that, so it's all there for free. But what we do is it's like, all right, Fireblocks is down, blockchains are having issues. We need to know if clients can settle their equity. We need to know if we can send to exchanges. If, let's say, we get a lot of risk from our OTC, what do we do with it? We need to make sure that we adjust our spreads. We need to make sure that we're able to pre-fund, preload the exchanges in case we need to quote and cover. That's one use case. So it's really a combination of like market data and blockchain data, and then kind of building a story of what do we need to do rather than just looking at purely market data. Sometimes there's a story behind why an order book is imbalanced, why there's less liquidity providers, and so on. And there's quite a lot more. I've put it also like a small example, but I kind of whiz through this. There's more than just like the health, obviously. A couple other things is the wallet tagging, which I talked about. What are people doing with their wallets? What are the exchange net flows? So exchange net flows just ins and outs. It's basically saying, more money is being poured into exchanges. What does that mean? Does that mean that there's going to be a dump? Someone's going to just dump 10,000 Bitcoin, or does it just mean that someone is just settling with their collateral, whatever? But these are actually interesting. And then you got the outs, which is like some news came out. FTX happened a few months ago. The same thing happened on Binance nearly. Essentially, people were just pulling out funds because I don't trust exchanges. I'd rather have it internally. I'd rather put it on a Nano Ledger or Trezor wallet. And we keep track of that. And then we obviously adjust the inventory. But we also make sure to adjust our spreads, our trading strategies, make sure we're wider on the books, because if the liquidity is going to be poor, if everybody's pulling out, it means you're going to get swept up on the book. And that's not good. So we adjust accordingly. Obviously, a few more examples: insider selling, holders, foundations, etc. These are kind of if you want to dig deeper. But we keep track of these, even just through Slack alerts. But we have them in KDB as of a few days ago, and we're trying to see if we can again create more of these stories where instead of just purely looking at market data, there's a bit more information. Another thing is, well movements, DeFi lending rates. Well movements is again, similar. People just moving funds to an exchange, just a pre-dump. Is something going to happen? There's going to be market impact because of our clients sent, again, 10,000 Bitcoin. And then DeFi lending rates, we want to see what's happening. Even if we can't go there as a registered company, we can still, look into it. So like a window into what's happening on the other side. And then there's kind of these other things like token unlock. If there's going to be more circulating supply, we need to make sure that our prices, widen, adapt to it. Governance votes, again, that's something very DeFi, but we trade some DeFi tokens, but in centralized exchanges, we need to make sure that we adjust, again, everything accordingly. soft forks and asset updates, which, if you want to look more, basically BSV had this like client update like a few months ago, and basically meant that, if you're an admin, you can like basically claw back anyone's coins and play around with it, and it's all yours. Nobody's gonna care because, well, it's crypto, and it's not great. So what do? We say, well, we need to make sure that our clients are aware. We need to make sure that we track what are the movements, what's happening with the blockchain. Is it an actual update that's gonna happen? Is it gonna be a hard fork or soft fork? And yeah, that's what happened. We got in touch with our counterparties, made sure that we told them beforehand that this was going to be an issue, that we need to convert your currencies into something else. So it's keeping track of all these. And then mini case study example of kind of using blockchain was actually a few days ago. So we had a client that owed us some USDC, so it's like a stable coin they need to settle. And what one of the guys in the company did was, he's like, all right, I'm curious, I want to see what these guys are up to. We're a big firm, they normally have some like, good trading decisions, they're good punters. And what he did was go on Etherscan, which is a way to kind of scan the Ethereum or ERC20 tokens. So what he did was go in there and he's like, okay, what happened prior to that USDC movement? And then what they found is that client actually went on to this Uniswap pool. And I'll keep it very simple. It's essentially a trading venue for swapping ERC20 tokens. So they use that. It's like a liquidity pool. There's automated market makers, yada, yada, yada. They used it. They went there. They paid a few basis points to convert it because it's not free. The way they show it is like slippage, but that's your spread. And then they also paid the gas fees because they need to send it there and then send it again to us. So what we did was we got in touch with a client. We're like, instead of going through all these hoops and hops, you can actually just send us the funds directly. But turns out the client was saying, oh, well, it just so happens that sometimes your spreads are slightly wider or you're axed a different way. So what we started doing very recently, and this was like, 6 days ago, we started kind of pulling data from these like liquidity pools, make sure that we're somewhat in line with these like liquidity pools. So you can, there's no order book. It's really just like pinging this like REST API and just saying, what's the spread for this? What's the slippage for this? You build like a ladder and then you can use it to gauge your own pricing. So I thought that was a cool story because it was like an operations person, middle office, looking at the settlements, involved trading, saying, we need to make a decision because this guy is like going across all these hops. We're probably not happy with our service, not happy with our spreads. We adjust our pricing, sales get in touch, and then we can basically get them to send whatever they want, and we'll make sure that it's more competitive than what they can get. They don't have to pay the gas fees, they don't have to wait confirmation times. Yeah, that's it. Thank you. Yep.
Two questions. First, do you guys use like QuickNode or other third-party tools?
Excuse me?
Do you guys use QuickNode or other third-party tools for hitting various blockchains, or did you build it using?
Yeah, so we use quite a few tools. So one of them is Arkham Intelligence. So that's more like, kind of finding all the insights and data. The TIE is good as well because they have, they keep track of like token unlocks, governance votes, hard forks, asset updates. But when it comes to like, if you're talking about, like more like sending funds from one to another, we use Fireblocks mostly, which is like kind of like the poor man's, custodian right now in the market, but people accept it because there's no PB. So that's what they use.
And do you normalize all your data through into like KX common data models that you're using?
It's all JSON based. So it's very early. We only started looking into blockchain data, how we can take advantage like a month ago. So it's just like very raw tables, but the plan is to build a POC and show that there's value in not just looking at pure market data, but blockchain data. Any more? Cool. All right. Thank you, guys.